Alright, welcome back to another episode of Markets in TURDMOIL. Today is September 8th, 2020, and I really hope that we didn't have to do another video today. I was sort of leaning more bullish from my last video, although that bullish case was basically chop in that range. Looks like for today, the bearish case played out, and we did touch the last session's bottoms, as well as blow past it. SPY is down 2.5%, the Dow is down 2%, and the Qs are down 4%, and the bears were really in control today. The bulls didn't really show up, not even on this gap down, and we didn't even try to fill the gap intraday. So just like the last video, I'm going to talk about the levels I'm watching, what's happening, and also a bullish and bearish case for the coming days. So as we see here, this was a pretty ugly candle. I'm pretty sure this wick is not real, but in any case, we are below the fibs that I drew last week, and also in the bottom range of this supply box, I like to call it, that I drew intraday today. Now this is very important because I think this is going to dictate our next movements. So if you're on the bearish side, a break below this box, we're going to enter some no man's land here, and this area has a lot of gaps to fill. So that I would target the next supply zone, which is here in the 327-ish to 321-ish range right here. If you're a stickler, it's 321 point, let's say 321 here and 327.3. That's our next supply zone target. I'm also looking at this this level here at 323.1-ish, which is the June highs, or at least where we topped out in June here. That might offer some support. As for a bullish case from these levels, we would definitely have to close green and up a bit, but it's very hard to see a straight V-shaped recovery higher. I would expect more chop in this area just for the supply and demand to bounce back out, and so we can bounce back higher. Now, if you're an indicators and moving average sort of person, we're actually a little bit above, we're still above the 50-day moving average. I would expect a touch there at this point. We are definitely in the downwards heading momentum. And if you look at the Qs, actually, the Qs, we have reached that point. Although I think most of this downward pressure is driven from a tech sell-off. So back to SPY here for the indicators. We are a little bit lower on the RSI that I like to look at, as well as the stochastic RSI. There's no evidence of curling yet, so we really have to see, for me at least, a day of strong demand and panic selling before I think is a good time to buy. At this point, for my personal holdings, I sort of went in a little bit light on Friday, a few points off the bottom here, and today I had to sell those for basically a wash back at where I bought them. So I probably wouldn't dip in too much before any sort of bottoming evidence comes out. That would lead to a lot more buyer's demand. Now, what's also super interesting today, though, was that the VIX, we gapped up a little bit, but we sold off basically back to Thursday levels. Now, this might mean that people are covering their hedges or no longer putting that many puts out. So it might mean that we are approaching a good support level or a good demand zone. So people are just covering the shorts at this point. Back to the SPY here again. If we reach this supply zone, I would have to wait and see any demand pick up, any strong buying before stepping back into the market again. But that could happen anywhere around here. So basically look at volumes and look at price action. And as always, stay safe out there.